Good weekend, all. Ira Epstein of Linn Associates with your weekend metals market update, and this is for Friday, the 15th of February, 2019. So here we are on an interesting day as the markets are wrapping up. We're in the last, 2:45 in the afternoon on Friday. You can see the stock market's on fire, the metals are on fire. The president made it sound as though China and the U.S. getting a bit closer on trade. The Chinese delegation is coming back right away for another meeting next week, and they're coming this time to America. I understand they're going to have a letter of memorandum done so that they can get on paper what they agree to, what they disagree to. They're getting closer to doing something. What the president does with that is anybody's guess. We'll see. At this point, he's keeping the tariffs on, but that's the leverage to get something done. In terms of trade, it sounds good. In terms of intellectual property, that's where we don't know where we're at, but trade seems to be good. The president also kept the government open. He signed the budget, and of course, he declared the national emergency, and now the question is, it goes through Congress, does it come up for vetoes, does it go to the courts? We'll all find out. Would you believe, if you look at the stock market, where the market was 6 or 7 weeks ago? Just think about it. From the beginning of February until Christmas Day, you had a crash in the market for all purposes. You've made up the vast majority of that. Metals during that time are staying strong, and the dollar has been weak, even though the Fed changed its policy and is on pause. And if you looked at the weekend information, as you do it over the weekend, and you look at the information, you'll see everything from industrial production, the New York Empire Index and all. You've got to start looking at things, because some of these numbers, they keep the Fed on pause, I think, at this point in time. When we look at the gold market, gold put in what we call an inside week. That means an inside month so far. Let me say that right. This is a monthly chart. It's only halfway through the month. So this number, that while it's inside, all it's got to do is get over 1325.40, and the line will keep drawing up, and the resistance comes in at 1367. That's still formidable resistance. If you'll notice, when you went up here in the past, that's where the market stops. So I say resistance starts 1354, the 100-week average, up to the upper Bollinger Band. Remember what a Bollinger Band is. A Bollinger Band's an algorithm designed to keep the market trading within it 95% of the time. So as you rally up to it, it's often resistance, and as you fall down to it, it's considered support initially. The bigger project for me is the sideways action. When the market breaks out of this one way or the other, it's going to be, in my opinion, fairly dramatic and very long term. It does not mean you have to just run up and take off to the moon. It means this becomes either a base or a top. When you look at what the market's done on the weekly chart, can there be any doubt that you've been in an up thrust? I don't think so. And what has the market done? It has stayed over this 18-week moving average of closes. It pulled back one time, checked it out, and then it just kept going. When it rallied to it at first, and this is one of the theories that I use in the market, often when you get to this 18-week, it acts as something of a resistance area. Market got through it, fell back, checked it out, and from there, the pattern began of higher lows and higher highs, and it hasn't stopped at this point in time. When we look at how the chart action has gone, it's fairly impressive. This is the weekly chart, and you can see how the market's edging out a pretty good week. If we look at last week's high and low, you had 1318.10 to 1302.20, and this week you have 1301.60 to 1318.80. You have an outside week up. So the market took out the previous week's low and high. I would say as a technician, what I don't want to see happen in the next 2 weeks is taking out this week's low. If so, you could drift back down fairly quick order. What else do I see? If the swing line is up here, I have that pattern of higher lows, higher highs. Ties right in with this week's low. I don't want to see that taken out. If it's taken out, what happens is you will still, believe me, have the pattern of higher lows. What would happen is, especially next week, you would just draw this line down. It would not be a violation. The week after would change things. When you take a look at where support on a pullback might come, Could it be the 100-week average instead of the 18? What you did have, and it happened here, and I think we pointed it out, we had what's called a bullish crossover. It is when a short-term average gets over a long-term average. This is the 200-week moving average of close. This is the 18-week. And since that occurred, the market really hasn't looked back. The next point for moving averages to come together is against this 1270 area, the 100-week average. When we come to Bollinger Bands, you've been what we call riding it. So you get to the Bollinger Band. In fact, this was the thrust area where you spent a couple of weeks over it. Then you pull back over, get back to it, bouncing. This is a traditional bullish move. In addition, you've got momentum that just stays locked in sideways as the market's going higher. That's bullish area. The gold-silver ratio. You often don't get a bull market in metals as a group with silver collapsing against gold. Now, the highest it got on the weekly charts was in the 86.5 area, got down about 5 ounces cheaper, and now it's come back to 83.65. This represents how many ounces of silver you'd put in your shopping basket, and assuming the world was perfect, you took it into a dealer and said, give me an ounce of gold. Forget markups, forget commissions, all that. That's the idea. When we come to GLD, the popular ETF, here too, you've got the clear pattern of what? You stalled right here. I think you can see that. Right here, you stalled out. You had that thrust like you did in the futures. You stalled. You made a lower low and came right back. That's one of those outside weeks we talk about. From there, you charged up, pulled back, and here's where you're at right now. Still very much in an uptrend. Outside week up, you don't want to see this week's low taken out. And in GDX, it's the 100-week average that's become important to the market with the combination of the Bollinger Band. Now, it's one thing to get over a Bollinger Band, but typically you don't stay over it very long. The market finds a way of the band either moving higher and prices drifting sideways or a correction happening. This is still very friendly, no change. The silver market on the longer charts has come alive. Higher lows, higher highs, hit the upper Bollinger Band, you pull back and you're doing fine there. Momentum still to the upside. Solid resistance, 1620 to 1628. Copper market. Copper got a lot of play this week as Goldman Sachs was talking, I think it was over the weekend, that they saw as much as a 14% or so gain this year coming in this market. They don't look bad on their call so far. The trend is up on the weekly charts, higher lows, higher highs. Last week you got to that resistance point, the upper Bollinger Band. Had you been able to advance further, the 100-week average became the resistance. Where's the support? Back in the 274.25 area. The market made a stab at it at 275.15 this week and still staying up. Momentum up, bias up, a lot of resistance in two areas. 284.90, the upper Bollinger Band to 288.40, trend up with support, 274, what is that, 40. In the platinum market, was that enough of a downside? Here's why. If you look from back here in September, you come over here to December, you come over here to late January, the market has not been able to follow through and get to the lower Bollinger Bands. So I question when I see that and all of a sudden I start getting a weekly reversal, was that enough to stop the decline? Don't know. What I can say is that I see resistance at 918.30 and if you, I'm sorry, 818.30, and if you clear 835, that puts the market back into a pattern where maybe you can get to the upper Bollinger Band. Anyway I go, this week's low at 780.90 took out a previous low at 786.50. Not the prettiest looking chart no matter what you do. The pretty chart, and it's been that way, and I think I've been a broken record on it for a long time, is the palladium. It just is the battery ever, what was that, ever ready? It never dies. You know, it just doesn't die. A lot of it has to do with the fundamentals. If there's going to be an increase in world trade, if things get better, automobiles, not diesel, gasoline, and that's what palladium's used on, a big use, is catalytic converters. Still moving higher and still very much in a bull trend. Dollar index, very much in an uptrend. Higher lows, higher highs, resistance getting close at 97.40 46, let's call it. Notice how that area is right here. You have failed several times in this general area. Is this going to be one of those times or not? Right now, the bias is up right here because you're over the 18-week average. Momentum is up. Trend is up. Resistance here, support back at the 96.23 level, and if the market were to break under this last low right through here of 94.87, I think traders would question, was that it for the dollar? So something to just think about. Doesn't mean it's going to all of a sudden be at one time. But at one time, what I try to do, and I think those of you that have tried my video, we keep growing in the subscriber. This is probably the most successful product we have launched in a long, long time, is the idea that in the mornings I tell you what I see on the charts and you take it from there. Have you ever wondered, you know, I've got this idea, I want to do it, I wish there was somebody I can talk to. I can't very well go talk to my next door neighbor, he doesn't trade futures. Who am I going to call? A lot of you trade with deep discount firms. Well, maybe you want to look and get another confirmation or somebody to talk you out of the trade. How it works is I record 40 charts. I go through them in a certain sequence. I go from the stock indices right into the energies in a certain way each time. I talk about the chart action. I'll tell you what I think the pros are doing. I'll give you the technical and fundamental analysis using these Bollinger Bands, slow stochastics, moving averages, and window envelopes, something you probably haven't seen that might be of interest to you. And will I throw out specific trade ideas with stops and objectives? Count on it. I can't do that in these public videos. I can only do it in videos with a user ID and password. So this is where I get to do it. Each morning it's 40 charts. First thing that I do, I'll bring you up to date with what's going on, and away you go from there. Now, I want something for it, and it's pretty simple. To try it out, 26 cents a day or so, I think you can afford that. If not, you shouldn't get it. How do you get it? Either call us, go to our website. It's that simple. If you go to our website, go under education or research, and it'll be there. You'll see Ira's morning subscriber video. Click on it, and away you go. Pretty simple. By the way, if you haven't tried my research, you'll see on the website you can get a free trial, but we keep a list of all the names so we know who's had a trial before. I'm Ira Epstein. You have a great one. Remember, we will not be here on Monday. It's President's Day. I'll be back on Tuesday. I intend on doing my subscriber video, however, Monday morning for my subscribers. You have a good day.